there, welcome to Informed Investing. My name is Don Lawrence. I'm CEO of STA Research, and our platform is stocktargetadvisor.com. Today we're going to have a quick chat about Mullen Automotive. It's a small EV startup out of California. Recently it's just starting to deliver cars into Europe, what's called the IGO, which is a small sort of little van used in major cities for deliveries. So that's the sort of the first of their product rollout there. They have other sort of prototypes and that they're planning on sort of releasing in the future. And they also bought out another EV manufacturer, Bollinger, another small startup there, earlier last year. Anyways, it's just thought we'd have a wee chat about this company. Obviously, it's a startup. The stock's fallen quite considerably from probably about a year and a half ago, November 2021. The stock was trading around $12 per share, and now it's sitting around 31 cents per share. So there's a lot of speculative upside here in the stock. Just looking at the valuation standpoint. It's a very sort of interesting play here. It gives an investor the opportunity to get in sort of very on the low side of a new startup there in the EV sphere. So anyways, guys, let's just have a quick delve in. Let's look very quickly at some of the fundamentals and metrics that are available to us. Again, it's a startup, so there's limited stuff available. First of all, we have a sort of slightly bearish fundamental analysis. Of course, this is very normal with a small startup company like this. We'll just have a quick rundown of some of the fundamentals. Some of the positive fundamentals is high capitalization, high market capitalization, with regards to the obviously the size of the company. Considering it is a startup, it's relatively large in comparison to startups of equal of their peers. There is superior earnings growth on the stock, and there's a couple more sort of negative fundamentals than there is positive, but the negative fundamentals are overpriced compared to book value, negative cash flow, and negative free cash flow. But as I said, guys, this is sort of a speculative play. On the fundamental side, it's going to look a bit ropey, just being a small company. We did actually ourselves today assign a speculative buy rating on the stock with a 12-month target of 65 cents. So we believe the stock should at least double. As I mentioned, it came off around $12 a year and a half ago. So there's sort of considerable room to move there in the upside. Quite possibly even in 2 years' time, if we get some sort of sentiment back in the EV sector here, we might see $5 or higher again. So it could be a pretty good long term play here on this stock. Anyways, guys, let me know what you think. I think it's a good opportunity to get into a small startup. And thanks so much for checking us out, and keep following us. Cheers.